Good morning, guys. Welcome into the show. All right, let's see here. So yesterday was a very interesting day. So we had a bet. Let's see, where did my messages pop up? Perfect. We had a bet on the day trading channel. What was going to happen? What was going to happen? Was it going to be a day of ending in the positive or ending in the negative? And this is when stocks were just flipping around. We didn't know exactly where they were going to go. So I took a peek at the overall volume of the market around 11 o'clock, and I said everything is going to turn negative and it's going to close negative. And I won the bet. So now the bid and ask nation is just full of degenerates that gamble on the stock market every single day. But that's basically what the rest of the children do out there as far as gambling. So here we are. Okay, let's see what we have going on this morning. Pull up some news. Stock market is down right now. By the way, can I zoom into this? This shirt right here, I need this shirt. So if anybody could find that shirt and just tag me in it, I need that shirt. I definitely need that shirt. And if you don't know, HODL stands for hold on for dear life. And that is exactly what you should be doing if you own Bitcoin, because your life is about to end. Okay, Atlanta's Fed Bostic. Here's my problem with this. He doesn't think that the Fed overdid monetary stimulus. Okay, that's fine. I'll if you want that, I'll give you that. What I'm not fine with is that they didn't have a plan to get out of it. And you guys know that I have said this many a times. When you go and buy a home, let's say that you buy a house for, I don't know, $500,000. And let's say you put 20% down. I'm just going to use round numbers here. You're going to throw down $100,000. So you're going to take out $400,000 of debt for 30 years at a fixed rate of whatever percentage it is. You know that every single month, why am I talking to you like this? You know that every single month for the next 30 years, you need to pay whatever it is your payment is on that first of the month or 30th of the month, whatever the hell you want to call it. You have a plan going forward on a significant amount of debt that you take out for you and your family, right? Well, why didn't the Fed do that? When they printed trillions and trillions of dollars and gave it away, they didn't have an exit strategy. And that's what bothers me about everything that happened with the Fed. Raphael Bostic said on Tuesday that the central bank did not overdo its money printing during the depths of the pandemic, expressing confidence that the Fed can get high inflation under control. Here is what he said. He said that he told Yahoo Finance that he currently sees the case for further half-point moves in the next 2 to 3 meetings, and they meet every 6 weeks. So we're going to see how that goes. Right now, they're sitting at 0.75 to 1 full percentage of the Fed funds rate. So he said also he has no regrets about the scale of Fed policies. I think if I was going to want to do too much or too little, I'd rather deal with the economy that had strong fundamentals and foundation. The alternative would have been that more small businesses would have gone through bankruptcy. I will give him that. And there would have been more precarious household finances. And it's actually a much more painful environment to be in. I'm not a bailout person, but if the Fed's going to shut down the government, I don't know what to tell you. I guess you have to bail them out. But I would have rather had them had some type of exit strategy. Cleveland Fed President Loretta Mester told Yahoo Finance at the same event that she similarly could see the Fed having a conversation about a more aggressive balance sheet drawdown. Next meeting is June 15th. They got to draw that. They got to start trimming back that freaking balance sheet because that thing is off the charts. So let's continue with the Fed. The stock market is freaking out because of the end of free money. So end of free money. Money is going to be hard to come by as far as quantitative easing goes and just giving it away. So let's see what we have here. As a result of basically the Fed not funding the economy anymore, stocks have posted their worst start since 1939 with the S&P falling over 16%. I think the NASDAQ is much further. In short, last week was the end of free money from the central banking because they're starting to trim back that quantitative easing that they've been doing with mortgage-backed securities and buying of treasuries. Markets are now experiencing what Wall Street watchers call a regime change, and understanding how far stocks might fall as a result requires understanding how markets price in a lack of Fed support moving forward. So going back to 2008, the Fed kept costs of borrowing low, allowing consumers to invest in homes, cars, education without the burden of high interest rate payment. This made sense when inflation and wage growth were low, as consumer spending needed encouragement whenever possible. This regime change has left markets effectively on their own and led asset risks, including stocks and cryptocurrencies, which is the hedge, to crater as investors grapple with the new norm. It also left many wondering whether the era of the so-called Fed put era is over. I highlighted that in blue because I still don't think that they are done. I think that Daddy is going to come to the rescue. Daddy Powell is going to come to the rescue when he needs to keep this thing going. The stock market is not the economy, contrary to what Cathie Wood and idiots alike think. Now, with that being said, all they want to do is support the stock market. That's all that matters. If the stock market is good, that means the economy is good in their minds. Going to the Fed put, the idea that the Fed will come to stocks aid in a downturn began under the Fed chair Alan Greenspan. What is now called the Fed put, once called the Greenspan put, a term coined in 1987 after the stock market crash. If you watch the movie Wolf of Wall Street, you remember Jordan Belfort was on Wall Street on that day. When Greenspan lowered interest rates to help companies recover, setting a precedent that the Fed would step up in uncertain times. Then, you guys remember Paul Volcker. If you don't remember Paul Volcker, he was the Fed chair before Alan Greenspan, and he got interest rates to 17, 18% because he had to tame inflation. Then Greenspan came in, had the more dovish policy, and every Fed chair since Greenspan is going. Ben Bernanke just printed money in 2008. I mean, that was QE like never seen before. That was really just the start of QE. That's when QE started, this whole quantitative easing thing. I thought it was illegal for the Fed to buy equities. So the Fed, it is technically illegal for the Fed to buy equities. Ever since the stocks experienced serious downturn. Okay, so here's the deal with that comment about the illegal for the Fed to buy equities. It is. Now, I personally think that they have done it in a roundabout way. I mean, I have a friend who thinks that the Fed is going to actually just start buying equities, but they do it in a roundabout way. They give money to the banks, they give money to you and me. This whole quantitative, this whole printing of money. Where do you think a lot of those trillions and trillions of dollars went? Well, they went into the stock market. But that's just a fact. But yes, it is illegal for them to buy. Equities. With that being said, a lot of these stock buybacks that these companies have been doing on borrowed money, they're getting the money from banks in a lot of cases. So, all right, Disney. Let's talk about Disney here. Disney may need to tell investors a new story. So Disney rocketed up about 4% yesterday, and then it came right down, and it is now down like 5%, I think, at this moment in time. Disney is less than $100 per share. Hallelujah. I was hoping that we would get like a 20% pullback, but I'll take 5. Somebody just didn't do their rain dance hard enough, but that's okay. Disney may have a storytelling problem, although the company added better than expected 7.9 million Disney Plus subscribers in the quarter. After the call, this is why you don't trade earnings, because right when they put out their press release, when people saw 7.9 Disney Plus subscribers, they said, hell yeah, this is wonderful. And the stock rallied. And I think it was up 5% at one point. And then the CFO, Christine McCarthy, she spoke, and this is what she said. She acknowledged that the second half of the year may not be quite as strong as the first half. Therefore, stock fell basically 10%. At Disney Plus, we still expect higher net adds in the second half of the year than the first half. It's worth mentioning that we did have a stronger than expected first half of the year. The delta we initially had anticipated may not be as large. The company reiterated Disney Plus subscribers should still up between 230 and 260 million by the end of 2024, and it will achieve profitability at that time. So it still is losing money, reflecting higher original content expenses, yada, yada, yada. Disney shares hit a new low on Wednesday, and they're going to open even lower today. So, man, I find it funny that they're not even talking about their parks anymore. They just take for granted that people are just going to go to their parks and everything will be fine. 10-year yield, well, we'll look at the yields in a little bit. I have no interest in this story. This is the Elon Musk. What the hell? I'm not even showing the screen. Damn it. All right, well, everything that I said about Disney, you don't need to see it. This is what you need to see. The most dumb thing, Elon Musk dismisses the hydrogen tool. Sorry about that. I was not even showing the screen. The most dumb thing, Elon Musk dismisses hydrogen as a tool for energy storage. So I have been saying this for a long time, and I don't even know what he's talking about. My thing has been, like, why don't we figure out one source of renewable energy first before we just start jumping all over the place to these different ones? But here we go. Elon Musk says he has reiterated skepticism about hydrogen's role in a planned shift to a more sustainable future, describing it as, quote, the most dumb thing I could possibly imagine for energy storage. During an interview with the Financial Times Future of Cars Summit on Tuesday, Musk was asked if he thought that hydrogen had a role to play in accelerating the transition between fossil fuels. He replied, no. I really can't emphasize this enough. The number of times I've been asked about hydrogen, it might be, well, it's over 100 times, maybe 200 times, he said. It's important to understand that if you want a means of energy storage, hydrogen is a bad choice. You are going to need gigantic tanks that would require hold of hydrogen in a liquid form, and if it were to be stored in a gaseous form, it would be even bigger. He's had a history of talking about this. In 2020, he said, fuel cells equal fool cells. Hydrogen fuel cells make no sense. It does not naturally occur on Earth, so you either have to split it with water or electrolysis or crack hydrocarbons. When you're cracking hydrocarbons, you really haven't slowed the fossil fuel problem. The efficiency of electrolysis is poor. There you go. So, this is a funny one. I like when he says, oh my God. I love when he's like in the middle of a sentence and he just goes, oh my God. And if you have to liquefy hydrogen, oh my God, he continued, the amount of energy required to make hydrogen and turn it into a liquid form is staggering. It is the most dumb thing that I could possibly imagine for energy storage. Is this guy not the best? Is it not amazing to have the richest man in the world be this big of a troll? I mean, come on. Rivian. We did it, guys. We did it. Rivian jumps as EV's automaker says the demand is high and production is on track. Hell yes. Rivian said that it maintained its 22 production target, saying it's on track to build a whopping 25,000 vehicles this year. They have 90,000 reservations. They are just flossing. The average price of a car is $93,000. Through May 9th, they have produced a grand total of 5,000 vehicles. That was sarcasm that I was using right there. I was making fun of them. 5,000 cars. So let's do a little bit of quick back of the napkin math here, but we're going to use a calculator, so it's not really back of the napkin. RIVN. Okay. So they only have one means of selling cars. Is that correct? I mean, they only have one means of making money. Is that right? That is right. So let's take 18.2 billion. So let's do 18. Let's do 18.2. Okay, so that's 18.2 million. Let's add a couple zeros. 18.2 billion. Okay, now let's divide it by 5,000. And each car, so I'm assuming that each car is sold for 3.64 million, right? Right? I mean, I went to dinner the other night. I saw a Rivian truck there. I assume that the owner paid $3.64 million for the car because the company's worth $18.2 billion. So, right? Must be a dope car. Must be cooler than all those Bugattis out there. Okay, no. Let's keep going. Crypto billionaires, vast fortunes are destroyed. This is the best story I've read in a long time. Look at these numbers. Let's just go through these numbers. Coinbase founder Brian Armstrong had a personal fortune of $13.7 billion as of November, $8 billion at the end of March, and $2.2 billion as of yesterday. Okay? The firm's shares have tumbled 84% since the first day of trading. I would like to show you something. I would love to show you something. My man. His name is no longer Jim Cramer. No longer Jim Crater. It's Jim Crater. Jim Crater. So right now we have Crashy Wood, Jim Crater, Daddy Powell, Stock Mo Murda. I mean, the names are just continuous, but Jim Crater. We like April 14th, 2021. We like Coinbase to $475. Before we get into this any further, let's just come over here to the whole chart. And let's go to April 14th. April 14th, 2021, intraday high of $429.54. On this day, what do you say? We like Coinbase to $475. Well, number one, it never got to $475, but it definitely got to $49. So another wonderful pick from Jim Crater. Okay, where are some more of these numbers I got to show you? Okay, on paper, CEO of Binance, he had a net worth in January. He had a net worth of $96 billion, one of the world's largest. And by Wednesday, he had 11.6 left. Don't get me wrong, it's still a lot of money, but holy cow. This guy, co-founder of Gemini, has lost $2.2 billion of wealth this year. So moral of the story, keep calm, listen to Jim Crater, and buy the dip. That's all I got for you. All right. Show's over. I don't know. I don't know what more to say at this point. I'm just kidding. All right, let's see. Stock futures are still down. Let's check out yields real quick. Look at this, guys. Oh, this was at 2.98 before the show started, but it's back into the threes. But look at this. This was 0.91. These yields. So the 10-year is starting to come down. Pay attention to the 10-year. And the 3-month is starting to go up. This was at 0.91 before we started the show. People are starting to move to the bond market. They're moving out of equities. All right? They're moving out of equities. All right, let's see what reports later today. Nothing really reports today. Today's probably a huge day for stock twits trolls on the internet. And what's that? Wall Street Bets. You have Aurora Cannabis, iBio. I mean, they're rivals with Johnson & Johnson in the minds of a 13-year-old student. Navosac. I mean, just Guardian Health Sciences. They are probably going to save the rest of the world. Affirm. Dare Biosciences. They are alt immune. Oh my God. Guys, get your I don't even know what I'm talking about wanting to buy all of these really good companies like Apple and Disney. I'm just going to get my oven mitts ready and go buy some all immune biosciences. I mean, why not? I think that they're going to save the world. Disney to 80, let's go. Amen to that. Hydrogen needs to be stored at extremely cold temperatures. Yeah, I don't really get it. Bitcoin is sub 27,000. That's okay. It's probably a good support level. Just buy the dip. Don't worry about it. Are we in a recession? I thought they used fuzzy math to say we weren't. Lower the cost of energy and anything gets cheaper. Yeah. No competent leader in sight. SQQQQ to the moon. Let's see. Technically illegal. Effectively not. Did I say that? Big Daddy Fed is going to step in once the boomers are finally retire. Yeah, maybe so. Disney is down 50% from all-time highs. Amen to that. Coinbase minus 9% pre-market. That's pretty good. It's just showing your face. Sorry about that. Wasn't the Fed originally created for the economy and not to support the market? Exactly correct, my friend. Exactly correct. Hydrogen is the future. Noted. It's a pilgrimage for some people. I don't know what you're talking about. Whoa. I'm not reading this comment, but it's a scary comment if he's right. That's too bad if that's true. Let's see. Not the richest anymore. Tesla dropped another chunk. Yeah, Tesla's fallen. Rivian is flat after hours, so yeah. So they have 90,000 reservations, but have produced 5,000 cars. They flousing, baby. They flousing. So why does Amazon have ownership and stake in Rivian? Seems like they've ripped off shareholders. Listen, man. The last report, the last earnings report, just go read the report from Amazon. They said that they've lost a lot of money on their Rivian investment. Luna coin went down 99.9%. Oh, that's too bad. I'm sorry. More like Jim No Brainer. That's too much. But I like it. Yeah. What else do we have? Disney. So is Disney sub 100? Yeah, I think it is. I mean, we'll check it right before I get going here with some of your questions. Mo, Tesla on the chart, sure. Bioscience, hydrogen fuel cells, Bitcoins, Beyond Meat, saving the world. Mo, I'm nervous about sending money into burn into the QQQ long term. Listen, if you put your money in the QQQ long term, you're a stronger man than me. Okay, let's see what Disney's doing right now. Oh, it's back. Disney's back, baby. Stocks only go up. Bitcoin, 28,000. Okay, so look at Apple, guys. Apple's at 143. Apple's at 143. Remember when people said Apple couldn't go to 143? Remember when Apple was at 180 just like 30 to 35 days ago and everybody said Apple can't go any lower? My dad literally told me Apple will never drop below 180 ever again. Well, that's awkward. What else do we have? All right, so let's look at some stuffs. Oh, I want to look at Beyond Meat too. Beyond Meat, $20. Thank God I got rid of those. I had puts on $40, then I changed my thesis. Ethereum, what was Ethereum's high? Oh, their high was only 4,900, and that's not bad. That's not bad. Not bad. Keep sticking with it, and you'll be just fine. Interesting Apple drop. Yeah, Bitcoin is like hedging a. Okay. All right, XOM. Let's look at XOM. XOM. So let's look at some oil and some energy. So I have a chart. Let me see. Do I pull up the chart? The chart's outdated. I'll pull up a more recent chart tomorrow. But it was basically showing what inflation is doing. Gasoline is like over 50% right now, and that was as of April. So, sheesh. Okay, guys, if I'm anybody that's in energy, and this is me up in these levels, I'm taking profits. Who knows when this thing can fall? You've already seen what they're doing in Florida. They're getting rid of the tax. You don't think that every state gets rid of a state tax on energy? That energy, fuel, especially companies like Exxon are going to start pulling back. I mean, you're hovering. You're putting your life on the line. You're putting your gains on the line right here at the 50 and 25-day moving average. So do your thing. All right. Nvidia close to lows. So Nvidia was down. I think I'm going off the top of my head. It was like 43% as of last Wednesday, and it's down even. So last Wednesday was May 4th was last Wednesday, right? And oh my God, it's down $30 from last Wednesday. So sheesh. Okay, let's see if they're at any support level. They're not. So you have room to go. You have room to go to probably $152, $155 a share, and then your next support level is $132. So somebody please tag me in this. Somebody please tag me in the bid and ask and just say Nvidia. Pay attention to Nvidia short. I like it. Costco's falling, baby. Costco's falling. Me gusta. I like it. I like what I'm seeing with Costco. Okay. I listened to you taking profits on CVX at 170. I'm glad I did. There's no harm in taking profits. Nobody ever went broke taking profits. 170 up here. Look at this, guys. This was CVX. You ran into resistance multiple times. You ran into resistance once and twice and 3 times and 4 times. And how many more times do you need to get beat over the head before it tells you that the stock price is not going through there and not going to sustain that level? Clearly, no, it wasn't it wasn't him. It was Taden. Nope, not Taden. Audio 94. It was Audio 94 that did not have to be hit in the head with a sledgehammer more times to realize that, yes, he should have taken profits up there, and he did. Very good boy, learning the rules. Target, by the way, if I say good boy to you, it's a term of endearment, not what's the other word? I'm not trying to be mean to you. So if you get a good boy from me, you should consider yourself lucky, because I don't say good boy to people that I don't like. Good boy. All right, let's see. Target, head and shoulders pattern. Yep, big time head and shoulders pattern right here. Big time head and shoulders pattern that is forming. Oh my goodness gracious. I am getting excited. Somebody please tag me in the bid and ask and say insult, disrespect. Thank you very much. That is not what I'm trying to do. So if you like it, I need a shirt. I need a shirt that just says good boy. All right. Target, somebody please tag me in the bid and ask. This thing is perfect. It's dropped and held below its 100-day moving average. It's going to open the day below its 100 moving average. I freaking love it. I love it. Somebody please tag me on this one. Boeing, how low can this thing go? How low can you go, bro? Excellent. Good. So it's not. So I added in here. On this big engulfing candlestick. It's down to 128. I think I grabbed this thing at about 142, somewhere in that range. So this is just setting up perfect. I love that we're getting still a great influx of selling volume. Now, I got a little wiki yesterday on top. That one makes me a little bit nervous to say, maybe my trend's going to turn a little bit. Let's zoom out and see where we have support. 124 support, 124 support. So let's keep paying attention to that one. Good morning, Seth. I'm sure that Seth is sitting in a bathtub right now. Oh my gosh. Okay, so Tesla is down to $700. Excuse me. Who told you earlier this week, check the tape, roll it back, that this thing was going to drop right to the bottom of this candle? And once it breaks this candle, you are going to start moving down. Who told you that this thing was going to drop and sit right at that candle that's your support level? Well, I'm just going to say it was me. It's not rocket science. It's just understanding patterns and where support levels are. And that is exactly what you got. Your previous support level was up in here. You held it for a couple of days, and then boom, and you are falling right to the bottom of that level. This is perfect. You've broke away from all major moving averages. Guys, I am telling you right now, this thing will be at 500 before you know it, and you are going to be coming down to these levels of coronavirus sooner than later. I am telling you that. It's going to happen. It's going to happen. Square. Okay, $68 from a high of $300. $290. I'll give you the benefit of the doubt. $290 to $68. Most disruptive company in the world. All right. So the good news is you're at a really strong support level here. The bad news is once you break that support level, you're coming all the way down here. I'll tell you a little story. I remember sitting in the Tampa airport, and I bought this thing back. Can I zoom out far enough? I bought this thing right in here, somewhere in here, around $58 in 2018. And I ended up selling it at about $78, $88, somewhere in there. And I thought that was insane, and that was it was not going to go much higher than that. Boy, was I wrong. The point is, it's back to those levels. So I can actually buy this thing for $10 away from what I bought it from in 2018. How do you like them apples? Unbelievable. Absolutely unbelievable. Listen, it's still a good short. You got a really good engulfing candlestick yesterday. Looks like it's going to open down today. Goodness gracious. These stocks just blow my mind. They just absolutely blow my mind. You have to remember, I haven't seen this. The last time I experienced a true bear market, I'm not talking about COVID. That was a bear market by definition. That wasn't a bear market. The last time I have experienced a bear market was 2008. That was the last time. And you have to remember, I was 18 years old. So it's not like I remember these things vividly and I was in the prime of my career and this and that. I was still some idiot in high school trying to work at a golf course and trade some stocks. So it's really different this time, having all of these 15 years of knowledge and experience. It's incredible. I was too. Christian was too. Christian, if you don't remember the bear market, there's something wrong with your memory. Meta platforms. This is beautiful. This is absolutely beautiful. So we're definitely getting this nasty, ugly face pattern coupled with a head and shoulders pattern that's forming. To be honest, I'd like this thing to come back up here one day and just fall apart on me. That would be awesome if that would happen. But I don't necessarily think it's going to happen. So we're going to stay right here. Let's see if we can get an engulfing candlestick today. One buy signal is all you need. Look at this freaking short. It is just perfect. You're getting enough. You're getting a good amount of selling volume coming in. You have a really nice trend heading down. You've broken away from the major moving averages. I love it. I can't believe Michael Scott went from Dunder Mifflin to shorting the market in 2008. God. CrowdStrike, CRWD, is that correct? It is correct. Yikes. Beautiful downtrend. Oh my gosh. So let me pull up the line chart. I want to make sure that we are not... Okay, this is what I wanted to see. This is perfect. So what I wanted to see, and you guys that understand this and you're in the bid and ask, you get this. What I wanted to see was fall. That was a big flagpole pattern. I mean, now from $200 to $140, and what did it do? It rebounded, and it created that M formation in there. This is exactly what we needed. We needed some stability in here, not just a straight fall. And now we have that stability. So the next time this thing comes back up, More likely than not, it's not going to go above whatever price this is. Let's figure out what price that is. It's not going to go above, 143.60. More likely than not. More likely than not. This is perfect. This is exactly what we wanted to see. So guys, here's the deal. When you're in a stock and you're shorting it down and you're shorting it down, you see a rebound one day. And this was a big rebound. Let's see. This the open. So this went from $139.71 to $154. So we're going to call that a $15 swing, just to use round numbers, okay? You probably see that and say, oh my God, the market's open? I thought it was like 9:15. Oh my, time flies when you're having fun. You would have probably thought, oh my God, I'm losing $15 a share. I got to get out of this. No. To me, all I do is look up a line chart and I go, thank God I'm losing $15 a share. You want to know why? Because I'm creating stability in there. So the next move down, which inevitably it's going to get because everything is just forcing it down. Trend is down, volume's down, everything's down. This says to me, thank God, because next time it's not going to jump up below, I think I said $143 or whatever it is. So there's my M formation. That is what you want to see. So rebounds in stocks are very, very welcome. Okay. I'll do as many more as I feel like doing. So I'm not censoring myself. All right. SQQQ. Woof. So the market has to be down bigly today. Let's see. Is the market down a lot today? The NASDAQ is down, just 1%? Okay. Let's see. So how do you play this? I mean, you have a great trend going, great trend. You have tons of buying volume coming in. Guys, remember, this is the inverse of the NASDAQ, okay? So when you are going long on this, you are actually going short. So you are shorting the NASDAQ. So as the NASDAQ goes down, SQQQ goes up. So if you can't short, if you don't have a margin account, whatever, or you don't want to spend $13,000 or whatever it is, you can do this for $60. All right. What else do we have? Yeah, it's a levered inverse too, right? Yeah, it's a levered inverse. All right. So AMD. So let's pull up AMD. AMD is just sitting at this consolidation level. Here's what you're going to get. Good downtrend. Now this thing could come down and swoop back up and then come back down again. Let's just hope that this thing turns into a dog stock. What am I waiting for here? All I want is to break that low. I want to break this area right here. As soon as it breaks that level, you better believe it that I'm going to be back in AMD, shorting again, and rolling on. You clicked Intel, then ranted about something else. It was a great rant, not complaining. I'll pull up Intel. Intel, amazing selling volume coming into this. Amazing selling volume. So if you're short on this, wonderful. Now here is the problem. Let's zoom out of Intel. Actually, I'm just going to pull it up on a long-term chart only just so you can see the. So here's the problem. And I am going back to 2017. This level that we're at right now, $42.23. Support. It's nonstop support. It is going to be very difficult for you to break through this $42.30 support level. I'm not saying it can't happen. If the market decides to keep falling, this will fall lower. But I'm telling you, if it doesn't and everything stays status quo, this is going to be a very, very difficult support level to break through. So don't get fooled on this one. Beyond Meat, BYND. Beyond Meat is down 20% right now. Oh, wait a second. Oh, never mind. They're only down 15%. We're good. They're back. All right, down 15%. Missed on earnings per share, missed on revenue. Apparently, they're not flossing, and they're not the next. I don't know what to tell you. Down 15%, $22 a share, lower than their IPO price, I think, right? Let's option R this. Are they lower than their IPO price? They are significantly lower than the IPO price. They IPO'd at $45. So I'm sure Jim Crater tweeted about this one too, but I don't know what to tell you. Go ahead, and if you want to do something with this one, guys, go ahead and day trade this. I would not recommend doing anything today. Maybe tomorrow, more likely than not Monday. See where the trend settles down to and go from there. SARK is up from 21 to 30 plus 40%. You got to be kidding me. SARK. Oh, over the past couple of days. Yes. Okay. ARK. Speaking of ARK, what is ARK doing today? So ARK is down right now 4%. So that means that ARK is down 80% off of its highs. 80% off of its highs. Disruption. Number one ticker on here. Can you see this? Number one ticker, where are we? I gotta go this way. Number one ticker, you probably can't see it. It just says ARK. It says ARK on my shaker thingy. Guys, you know what's disruptive? Companies that don't make money. I said this yesterday. Let's say you have a family that makes $100,000 a year, has $250,000 in debt, and has zero cash in the bank. Are you going to go buy that family? No. Just like you shouldn't go buy that company. This chart is exactly what happens when you buy companies that don't have money, don't make money, have no potential to make money. An idea is not disruptive. Action is disruptive. They don't got the action. That's it. It's as simple as that. ARK is down 76% off of its highs. PayPal's getting into some type of territory. For the record, just in, when was this? November? July? So last summer, $310 a share, $74 today. PayPal, good company, good cash flow. These stocks will fall. I promise you that. These stocks will fall. Look at Disney. Look at Amazon. Look at Apple. Look at Microsoft. Look at all of these companies. They will fall. They will recover better, but they will fall. Okay? Buy my family, Daddy Mo. So PayPal is sitting at a very strong support level. If it breaks below, honestly, if it breaks below $73, maybe $70, you're coming down to these levels of $30, $40, okay? You're coming down to these levels of $30, $40. All right, let's see here. Guys, I got to pull up Amazon. As of last Wednesday, where was last Wednesday? The 4th. So this company was at, Amazon was at, I'm going to call it, what was the low? The low was, I'm going to call it $2,400. Today it's at $20.70 right now. So this thing was down 39% as of last week. When I FaceTimed you, you didn't answer. What? Guys, what was that? Yeah, I was ignoring your call. Paul, I'm a big shot here. I got a show to do, man. Starbucks. Oh, speaking of Paul, hold on a second. Paul the quant. Not the quant, my quant. Paul, calculate for me and tell me what 2,400 to 2070 is. What percent fall is that within a matter of a week? And then add that to 39% and let me know what the total loss is on Amazon since it's intraday high back in, let's see here, since it's intraday high back in, which was 3,800. Do 3,800 to 2070. 3,800 to 2070. All right, let's keep going. Mo is not being a good boy. Unbelievable. All right, let's see what else we have. We got to do Bitcoin. BTC USD. Here we go. 45%. 45.5% drop. Guys, Amazon, one of the FANG stocks, has fallen 45.5%. It happens. These stocks will fall. And you have a company like Amazon, granted, they're not the best at making money outside of Amazon Web Services, but these companies that do extremely, I don't know. Paul, I don't do math. I don't do any math. I have a quant. Why do I need to do math? All right. Look at Bitcoin. Bitcoin's at 27,850. Guys, 27,850. 27,850. I don't know what to tell you. Oh, let's look at this Loon thing. Loon. Is it Loon? Loon. Yeah. Luna. Binance. Here you go. Look at this chart, guys. Look at this. I'm going to pull up the long-term chart here. Look at this chart. Look at that. Look at that fall. This thing fell in a matter of, let's do 3 days, $65 to 1 cent. It's 1 cent right now. Literally, it is 1 cent. So going back to April 5th, it had an intraday high of $118. Intraday high of $118 on April 6th. Today is May 12th, and it is now 1 cent. Oh my God. Is this not the best thing ever? It's so much fun. Coinbase. This is Jim Cramer's pick. So on April 14th, 2021, they had an intraday high of $429.50. Jim Cramer said that this thing is going to go to 475. I don't still have the tweet up. He said it was going to go to 475, and it's now at $46, and it is down only 20% today. So I don't know, guys. Is that enough abuse for one day? I don't know. This is incredible. All right, I'm going to get out of here. We got to day trade in a little bit. We're going to day trade and swing trade at 10:10. I will see you guys there. I got to drive to the office. Catch you on the flippity flap.